Welcome back to Investing Talk podcast.
Good to be back.
We've been looking through all the research on Innoviz Technologies, the automotive LiDAR company.
That's right. Innoviz.
Yeah.
They've certainly been making some noise, especially when you think about autonomous driving sensors.
Definitely. And the big question we're tackling, the one everyone seems to be asking, is this. Looking at their latest results, analyst comments, recent progress, is now actually a good time to think about buying Innoviz stock?
It's the core question, isn't it? Timing is everything.
Exactly. Now, before we dive in, just a quick reminder, please hit that subscribe button, give us a like, and leave a comment. And seriously, if there's a specific company you want us to cover like this, drop it in the comments below. We do read them.
We really do. So our goal today is pretty straightforward. We've sifted through the analyst reports, the Q2 numbers from 2025, other market intel.
All the raw stuff.
Yeah, exactly. And we want to pull out the key insights, give you a clear picture of where Innoviz stands right now, and importantly, what catalysts are coming up that could, well, move the needle.
Okay, sounds good. Let's start with the recent past then. The last 3 months or so, July to September 2025, it felt like a period of maybe getting their house in order.
That's a good way to put it.
Yeah.
There was definitely some foundational work happening. Operationally, what stands out?
Well, the first big one back in July was clearing that Nasdaq hurdle.
The minimum bid price compliance.
Right, yeah. Staying above $1 for 10 days straight, that took a significant risk off the table, didn't it?
Absolutely. It's less about the day-to-day business itself and more about access to capital. It signals to institutional investors, index funds.
That it's safe to invest again, basically.
Exactly. That major delisting worry is gone. It makes the stock, fundable again. Removes a big psychological block.
Okay, so that regulatory cleanup was key. But they didn't just stop there in July. There was also a pretty big development win, wasn't there?
Huge. A significant development agreement with a top 5 global car maker for a program starting in 2027.
A top 5 OEM. That's serious validation.
Enormous validation. It shows their LiDAR tech isn't just interesting theory. It's being chosen by the giants for actual future cars. It moves them up a league.
Right. From potential to actual partner. So how did all this momentum, the stability, the validation translate into the numbers when Q2 earnings came out in August?
We saw some real positives there. Revenue beat expectations. They reported $9.75 million versus the $9 million estimate.
Okay, good top line.
But the really interesting part, I think, was the efficiency. They cut their cash burn down to $7.3 million.
Oh, wow. So spending less even as revenue grows.
Precisely. That's a strong sign of scaling effectively, getting leaner, even though the EPS, the earnings per share, did slightly miss what analysts were looking for.
Still, that cash burn reduction is key for a company like this.
Very key. And they also maintain their full-year revenue guidance, that $50 to $60 million range.
Okay. So, stability, a big OEM win, better efficiency. How did the analysts react once all this settled in by September?
This is where the story gets particularly bullish. Goldman Sachs came out and upgraded the stock to strong buy.
Goldman, strong buy, that's a big call.
It is, and they put a $2.50 price target on it. That's a major of confidence.
Yeah.
And you combine that with the fact that institutions already own a hefty chunk, about 63%.
63%, wow.
Yeah. It shows a growing consensus, at least among analysts and big money, that Innoviz is actually executing now.
Okay, that really sets the scene. Regulatory issues sorted, early execution looking good. But let's talk fundamentals. What's the underlying strength, the competitive edge that supports this bullish view going forward?
Right, the core investment thesis. If you look at the financials, the trend is definitely positive. Full year 2024 revenue hit $24.27 million. That's up over 16% year over year.
Solid growth.
And maybe more importantly, while they're still losing money, they're deep in that investment phase, which is normal.
Sure, R&D isn't cheap.
Exactly. But their net loss actually improved. It shrank by over 23% compared to the previous year. So the gap is closing. They're becoming more efficient as they scale.
Getting closer to profitability while still growing the top line, that's the trajectory you want to see. But, these high-growth tech companies often need cash. Are they okay financially? Do they have the war chest?
Good question. And yes, their balance sheet looks pretty robust right now.
Yeah.
Market cap around $341 million, low debt, and importantly, ample cash reserves.
So no immediate need to raise money and dilute shareholders.
It seems not. They appear to have enough liquidity to fund their current plans without that imminent risk. It gives them breathing room to execute without a solvency scare hanging over them.
Okay, financial breathing room. But the LiDAR space is crowded. Everyone claims their tech is the best. What really makes Innoviz stand out? What's their moat?
It really comes down to being a leader in automotive-grade LiDAR. That's the key differentiator.
What does automotive grade really mean in practice?
It means building a sensor that can survive a decade of real-world abuse potholes, engine vibrations, extreme heat, freezing cold, and still perform reliably enough for car makers like Volkswagen or Mobileye. That's incredibly difficult.
Much harder than, say, a sensor for a drone or a robot vacuum.
Orders of magnitude harder. The fact that they've secured these major series production deals and are even expanding into areas like heavy-duty trucking proves their tech meets these incredibly tough global standards for safety and durability.
Right, that makes sense. That really separates them. Okay, let's circle back to the analysts. That consensus target of $2.77, that's what, nearly 63% upside from where the stock's been trading recently.
Yeah, significant potential upside based on the average target.
But let's be skeptical for a second. 63% for a company not yet profitable in a tough sector. Are those targets maybe a bit too optimistic, relying on future wins that might not happen?
That's absolutely the right question to ask. And yes, those targets do bake in assumptions about future contract wins, no doubt about it.
Oh.
However, the argument, particularly from analysts like Goldman, is that Innoviz is currently trading at a discount compared to its peers, even with its established leadership.
A discount? Why?
The idea is the market hasn't fully priced in the value of having already secured giants like Volkswagen. They've proven the tech works at scale. So analysts see this valuation gap.
That they expect to close as more revenue comes online or more deals are announced.
Exactly. They believe the current price doesn't reflect the de-risking that's already happened with those major partnerships.
Got it. So fundamentals point up, analysts are bullish. Which brings us neatly to the charts. What's the technical picture look like? Are buyers actually stepping in?
The technicals are lining up quite nicely with the fundamental story, actually. You see a clear pattern of higher lows and higher highs since the stock bottomed earlier in 2025.
The classic definition of an uptrend.
Pretty much. It shows a definite shift in direction. Buyers are becoming more aggressive than sellers over time.
And where's the price now relative to those key moving averages everyone watches?
It's holding above both a 50-day simple moving average, that's your short-term trend indicator, around $1.73.
Okay.
And crucially, also above the 200-day simple moving average, the long-term trend line, which is down near $1.25.
So above both short and long-term trends, that's strong confirmation.
It really is. It tells you this rally isn't just a quick bounce, a flash in the pan.
Yeah.
There's sustained buying supporting it.
What about the momentum indicators like RSI, MACD? Are they looking healthy or overstretched?
They look healthy. The RSI, the Relative Strength Index, is hovering around 60.
Which is bullish but not overbought, right?
Exactly. It's kind of the sweet spot. Shows
Yep.
good buying pressure, orderly accumulation, but not euphoria or excessive speculation yet. And the NCD indicator has also confirmed a bullish crossover.
And volatility.
It's been moderate, which again suggests this is more about patient, informed capital moving in rather than a wild speculative frenzy. The whole technical picture looks quite constructive.
Okay, constructive technicals backing the fundamental story. Now let's look ahead. The next 3 months, what are the key events, the triggers that could really shake things up for Innoviz stock?
Right, the near-term catalyst. The biggest one, without a doubt, is the Q3 2025 earnings release.
When is that expected? A November-December timeframe?
Usually, yes.
Yes.
Late November or early December.
Yeah.
And investors will be laser-focused. Can they keep that efficiency improving? Can they sustain revenue growth? And crucially, any updates on new OEM orders, they need those to hit that full-year guidance.
That $50 to $60 million target, Q3, will be a big test for that.
A very big test.
And given that huge institutional ownership, 63%, you said, what specific dates related to funds should we be watching in Q4?
2 key periods. First, around October 15th, you have the quarterly rebalancing for indexes and ETFs.
Ah, so passive funds might be buying or selling based on index rules?
Exactly. And then around November 6th, you get the institutional 13F filings. That's when the big active managers have to disclose their holdings.
So we'll see who's been buying or selling.
Precisely. Because ownership is so concentrated, any significant moves revealed in those filings, big funds adding or reducing positions can really impact the stock price. Definitely dates to mark in your calendar if you're tracking this.
Okay, earnings and institutional flows. What about, well, the rumors, the more speculative stuff?
Always worth keeping an ear out for those, especially in tech. There's definitely chatter about potentially landing another major OEM win, one that's not already public knowledge.
That would be huge validation again.
Massive. And then there's the perennial possibility of M&A, a strategic acquisition.
Someone bigger wanting their tech.
Right. If a large semiconductor player or a tier 1 auto supplier decides buying Innoviz is the fastest way to get top-tier LiDAR capability for autonomous systems, well, that could unlock value very quickly, potentially justifying those higher analyst price targets almost overnight.
Okay, lots of potential catalysts. But we need balance. Investing here isn't risk-free, especially in a pre-profit tech company. What are the main risks people absolutely need to consider?
The number one risk is still the fact that they are losing money.
Still burning cash, despite the improvements.
Exactly. Losses are narrowing, yes, but they rely heavily on R&D spending. Execution risk is real. If there are delays in delivering on current OEM programs, or if they struggle to sign those next crucial deals quickly,
Then the growth story could stumble, and the share price could take a hit, especially with high expectations baked in.
precisely. Meeting those expectations is critical now.
And what about risks beyond just Innoviz itself? Sector risks.
Definitely. The LiDAR space is incredibly competitive, lots of players fighting for position, and there's always the background risk of technological obsolescence.
Someone coming up with a better, cheaper sensor.
It's always a possibility in tech. Now, their recent design wins suggest their current tech is very strong and resilient,
Right.
but they can't afford to stand still. Innovation has to be constant.
Okay, so company execution risk and sector competition tech risk. Good to keep in mind. So let's synthesize all of this. We've got the operational turnaround, the growth signs, the strong technicals, the upcoming catalysts, but also the clear risks. What's the overall take, the investment thesis boiled down?
When you weigh it all up, the stabilization, the proven leadership in a key growth sector, the positive chart momentum, and that packed schedule of potential catalysts just ahead, I'd rate the overall thesis as bullish, maybe a solid 8 out of 10 on conviction.
An 8 out of 10. Strong.
Yeah. It looks interesting for potentially two types of investors. There's short-term appeal for traders looking to play those Q4 catalysts, earnings, fund flows, potential news.
Okay.
And then there's the longer-term potential upside for those betting on the big shift towards autonomous vehicles, where Innoviz is clearly a significant player. Dual appeal, you could say.
That's a great summary. So Innoviz seems to have cleaned up its act, gained analyst trust, and is heading into a potentially news-heavy period with strong institutional backing.
That captures it well. And maybe a final thought for you to consider, building on all this.
Go on.
If those continued design wins really do solidify the company's moat like we discussed, and if analysts like Goldman are right that it's already undervalued compared to peers, how fast could just one more major confirmed OEM partnership actually close that gap between today's price and that average $2.57 target?
How quickly could perception catch up with reality if they deliver again?
That's the question to ponder as we head towards year-end.
Excellent point to leave us with. Thanks for breaking that all down, and thank you all for listening. Keep doing your own research, and we'll catch you on the next discussion.